Hi everyone, welcome to the Westferry Fund August video where we'll cover, amongst other things, the July results for the fund. Um, a few things happened during the week in terms of content. If you have a look on the Westferry website under the news tab, you'll see that I did a interview with Coffee Microcaps, as it's called, and ran through a bit about Westferry itself, but covered two stocks which are amongst the top four of our equity holdings. The first of those is Fiducian Financial Services, and the second one is SDI Holdings. As I explained, SDI is a maker of dental products, and both of those have done reasonably well for us, both before and since that interview. So that's worth a look if you have time. In terms of other things, I'll just share the screen here of the monthly report. So in July, we managed to gain 3.2%, which was a second decent month of results, second month in a row where we've managed to beat both the both the small ordinaries and the ASX total return indices. The main stocks that helped us last month. Well, first of all, we were helped by the fact there weren't too many down stocks. The three I list there were, in fact, the only three detractors to the fund, and they're all only very small losses. Fiducian Group, which I've just mentioned, was the largest contributor, but we also had very good returns from Motorcycle Holdings and Verbrick. If we just go to share side here, we can look at some of the other companies that did well during the month. Harm Money, which you'll see has entered the top 8 of our equity holdings, and Laser Bond also did very well for us during the month. Harm Money is an interesting one in that it's probably what you describe as a reasonably low quality company. It's one of many companies on the ASX that is essentially a lender, a non-bank lender. It plays in the mid to lower range in terms of credit quality. I mainly avoid these companies. The reason we've got into that one is that they can be good investments when they're reaching an inflection point. Basically, a lot of these companies list during a period of high growth in terms of their lending growth each month, and then their revenue, often at a time when they're still either loss-making or barely profitable. And often the market goes through a cycle of being very excited in the early days about how fast they're growing before getting bored and realizing the fact that they're still a fair way off making a profit. And sometimes that's the end of them. Sometimes they come good, and once they get to a certain scale, they can go from being loss-making to a really good, solid profit-making company in a very short period. That generally they've put the hard yards into the upfront marketing. There's a certain accounting treatments in the early days when you're growing really fast with these companies that require you to take significant provisions in the early days. That tends to wear off. Your back office costs tend to be fairly fixed, and at a certain point that the loan book becomes big enough, they can grow extremely quickly in a short period in terms of profit, which is what I'm mainly interested in. Harm Money is basically at that inflection point, I think, at the moment. It's now become profitable, and it's at a point now where I think it can, yeah, and I'm not Nostradamus here. I'm just going by their own guidance. Essentially double profit, within a 12 to 18 month period. Just because the company says it can or will do that doesn't mean it will. Obviously, there's massive risks involved with these companies in terms of any the company itself, of course, in terms of their credit quality, but then the economy. I think with the state of the economy at the moment, with in particular unemployment being at very low levels and falling again today, the risks of bad debts are fairly low for these companies, at least in the fairly short term that I intend to be invested in it. And the market will warm up pretty quickly in what's a reasonably illiquid stock to these, significant improvements in profit. It's a fairly shareholder-friendly company in that I think a lot of that profit will flow back to investors in the form of dividends. So that's a bit of a touch on one stock. You'll see that the stock price was 104. Um, the reason it's actually come down from 1.055 last month is that it's got ex-dividend. We've declared um, a dividend as of 30 June. At the moment, we issue an estimate of what that dividend will be, which is 4.7 cents. Of that, 3.7 cents will be cash, and the rest made up in franking credits and foreign tax credits, which we get from dividends and both overseas and Australian dividends and pass through to our investors. And so the 1.008 comparison figure there is one where I've adjusted it so you can sort of see, in fact, what we've grown from investments during the month. In terms of this month, I'll just do a bit of a preview on one of our unlisted positions because it basically came to a finalisation today, and that's an investment we made in a unlisted company called Nebulor. So that's a investment we made about 2 years ago. It was reasonably significant for us. We invested $1.6 million in this company, which I sort of learnt about through my connections with AF Legal. It was a subsidiary of a company that had once tried to merge with AF Legal. Um, it was a company that had developed a legal practice management system, and it was gaining some reasonably good traction, partly because it was a company that was, or a system that was developed off the back of Salesforce. So although it was fairly um, young in terms of its competitors, it was one that had been built from scratch for Salesforce. That was an increasingly popular model with law firms, and it was getting really good traction because of that. So I did a lot of work. I mean, amazingly, it's a company that was based at Mount Gravatt at the time, about a kilometre from my house. Not exactly where I was looking to find a high growth tech investment, but there it was. And we invested. Again, part of the reason why I was interested was the seller. I always like it when the seller has a good reason for selling that doesn't relate to the company itself. In this case, the seller was very much a distressed seller. I was aware of that and could verify it from other means. They needed cash desperately. In what they own shares in this very liquid investment, and we were able to buy at a fairly good price. So we invested 1.6 million into that. It was growing reasonably well, and then we were approached by a much larger company that has its own legal practice clients. It ran its own practice management system, but it was an antiquated system. They'd actually tried to roll out a new model and failed. And they approached us and ended up buying us. That was a company called Dye & Durham, which is actually a large Canadian company with an enterprise value of about 1.7 billion Canadian dollars. That purchase was made a year ago. The way it was structured was that half the money was upfront, half arrived today. To get the deal over the line with some very quirky co-shareholders, we had to agree to accept most of our money in the second tranche, and that arrived today. So I gradually valued that up towards, and I should talk about the price we got. Essentially, the price we received was 2.6 million. So it was $1 million profit on $1.6 million investment. So, a good return, probably more intricate and stressful than I'd hoped because I've sort of had to broker peace deals between warring sets of shareholders, which you don't have to do in the public sphere. But anyway, it was worth it for that kind of return. So I've gradually revalued it as we've come closer to the payment date. Nonetheless, the fact we've now got the money in the bank account, I'll obviously now value that at its cash value, which was higher than I had it at the end of last month. So that will guarantee us basically a 2.5% start for this month, August. Obviously, that could be wiped out by losses or further improved by gains as we enter into reporting season. But that's a decent kick along for August so far. And in fact, as the month is at the moment, we're slightly ahead even despite that. So hopefully we can put together a third good month in a row. Although, as I say, the second 2 weeks of August will involve a lot of our companies reporting, and we could get some sharp movements up or down because of that. In terms of the only other thing I wanted to comment on really for performance last month was the fact that we're invested in a wide range of things. You'll see the pie graph there. One of those slices is the dark green one, where 8.2% of our assets are invested in other managed funds. So that was a particularly good performer last month. We're invested in a number of funds, not sort of the everyday ones that your financial planner is going to put you in. These are ones run by usually microcap specialists who I've come across in my travels. And they tend to be quite choppy compared to what I think is the stability of Westferry. Some call it boring. But as an example of that, one of our funds by a guy I really rate as a very high quality analyst of microcaps, Luke Winchester. He runs a fund called Merriweather. He's had a tough run since he started that fund because he basically started it at the very peak for or at least historically recent peak for microcap stocks. They've been out of favour, both on their own and certainly comparatively to the large cap end of the market since he listed. But I think in June and July we started to see the first hints that the bullishness that's gone right into mega cap stock may be starting to flow through to the small end of the market. As an example of that, he had essentially been flat to slightly up in the 2.5 years since we invested with him. But in July alone, he managed to return 17% gain just because of this flow into the very small end of the market for the first time in a while. So that gives us some exposure to that super small end and to really smart guys. So that's where we sort of are for this month. I was going to keep it fairly brief. Throw in a question or in the chat or in the Q&A if you have one now. But from October onwards, we'll get some guests in. October, we're starting off with Paul Wagner, who's the CEO of Allmain, which is one of our unlisted investments. I also intend to get Chris McFadden, the CEO of AF Legal, along after the results, and some others as the year goes on. But yeah, as I say, we'll hopefully manage to put together a third decent month, touch wood, and happy to answer any questions either now or subsequently. I'll get the video of this up for those who haven't managed to tune in. So no questions at the moment. Thanks very much for joining in. Give me a call if something comes to mind afterwards. All the best.